Good morning. It's 5 a.m. in New York City. I'm Matt Miller in for Danny Berger with your Bloomberg Brief. Here's what you need to know. Cooling down. A public feud between Elon Musk and President Trump may de-escalate with a scheduled call today. Back in the green, stock futures climb. Tesla bounces back after falling 14% yesterday, and all of that ahead of the latest jobs report after jobless claims rise to the highest level since October. So in terms of what we're looking at on markets, S&P futures now up 0.4%. NASDAQ futures gaining about the same. Russell 2000 small caps have really been winners this week, outperforming the benchmark indexes, the bigger benchmark indexes. In terms of treasuries, we've been watching for turmoil, especially at the long end. Really haven't seen it. The two-year yield at 390, 391. The 10-year yield still at 437, 438, and the 30-year yield at 486. So a long way down from 450 and 5, which are the levels that caused a little bit of angst. For some stocks to watch, let's get over to Valerie Teitel in London. Valerie?
Good morning, Matt. Let's start with a check on Tesla. Those shares recovering somewhat, up 5% so far in pre-market trade. Some optimism for the stock after hearing that the White House aides have scheduled a call with Musk. Politico reporting that has been boosting the stock after the worst market cap slide for Tesla yesterday on record. Let's move on to the retailers who've reported earnings, that being Lululemon, cutting its full-year profit outlook. Again, those shares are down 21% pre-market. There was also a warning in their earnings about their profitability due to tariffs. That's going to be one to watch on the open. Lastly, let's move on to tech. Broadcom are giving a tepid forecast. This is the chip supplier for Apple and Alphabet, falling some 4% so far in pre-market trade.
All right, Valerie, thanks very much for that. Valerie Teitel looking at some of the stocks moving for us. Obviously, Tesla is front and center, and the jobs number is going to come out. May overshadow that feud between Elon Musk and Donald Trump, doubtful. But we're going to speak to Monica Defend of the Amundi Investment Institute on markets, as well as Citi's Veronica Clark on today's upcoming jobs report. But a week ago, President Trump and Elon Musk stood side by side in the Oval Office to proclaim their lasting friendship. Yesterday, tensions between the world's most powerful politician and the world's richest man flared up spectacularly as they traded insults, hurled accusations, and made threats in real time in the town squares of social media. Musk went as far as agreeing with an X post calling for Trump's impeachment. The president, in turn, hinting that he may terminate U.S. government contracts given to Musk's companies worth billions of dollars. He spoke about the feud in the Oval Office yesterday.
I've always liked Elon, and I was very surprised. You saw the words he had for me, the words of, and he hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible. It's the biggest cut in the history of our country. We've never cut. It's about 1.6 trillion in cuts.
In response to a user of X urging him to cool the feud, Musk has signaled a move towards cooling tensions with Trump after the very public unraveling of their relationship. For more, I'm joined by Bloomberg Weekend America's editor Kevin Whitelaw and senior editor Bill Ferries, who has covered national security for us here in the States. Kevin, let me ask you first about this feud. It was pretty spectacular. I mean, allegations about ties to Jeffrey Epstein came up. How did that erupt?
Well, you know, I think that it all, first of all, these are two incredibly, strong personalities, and I think there was a certain amount of betting in various parlors and casinos around the world about how quickly this and how long this thing could last, because these two men were obviously very were bound to clash at some point. In this case, it does seem to be that the spending bill, which Trump was praising, ultimately really is projected to add a huge amount of money to the deficit, rather than really sort of cementing the kind of spending cuts that Elon Musk was really trying to push in his role and at the Department of Government Efficiency. But also the bill really zeroed out very quickly electric vehicle credits, which is something that is near and dear to the heart of Elon Musk's Tesla. And so this the bill not only didn't sort of cement what Elon Musk's government legacy was going to be, but it was also threatening his company. So it does seem like those two things sort of made him really tee off against the bill in a very strong way, and that obviously triggered the reaction we saw from Trump and sort of the spiral that then went. And I think the ultimate question is this beyond repair at this point?
So I guess the most important question here, Kevin, is how influential is Elon Musk when it comes to congressmen, when it comes to senators? Can he actually kill the bill?
Well, I mean, the bill was already in a fair amount of peril because of the Republicans have an extremely slim majority in the House. In the Senate, there's a number of senators that have some very fundamental concerns and problems with it. So it was always going to be a very, very difficult lift to try to get this bill through in any kind of form. And obviously, when you have someone with the kind of wealth and potential influence of Elon Musk teeing off against it and pointing out the inconvenient truth for Republicans who had been wanting to talk about the spending cuts and talk about how this really actually is adding this enormous amount to the deficit. That's really an inconvenient thing for them to hear at a time where they're trying to find some consensus on it. So he can definitely throw a monkey wrench in it, but ultimately, the Republicans in Congress are going to have to decide who's more important, the president, who has shown that he still has control over the heart and soul of the Republican Party, or Elon Musk, who obviously whose purse strings could be used either to help or to harm them down the line.
Kevin, thanks very much. Bill, let me get to you on the national security side, because Trump has put Musk's businesses in the firing line. Obviously, SpaceX incredibly important to what we're doing with the ISS. Starlink has been very important to the Ukrainians in the war that Russia started 3.5 years ago. What would the implications be of the U.S. government cutting off Musk's companies?
Yeah, they would be huge. It's hard to see that even happening. I mean, the U.S. government and Musk-owned or Musk-run companies are so intertwined. One doesn't function well in some realms without the other. I mean, Bloomberg government did a quick look at it. Tesla and SpaceX have gotten about $22 billion in unclassified federal contracts since 2000. There's billions more likely in classified contracts that we don't have a lot of insight into. The entire space program is hugely dependent on SpaceX and its capsules and rockets, getting astronauts to space, resupplying them, bringing them home. There are potentially some alternatives out there, but they're not great ones. Boeing's Starliner had some issues when it delivered a pair of astronauts to the space station last year, where the U.S. is trying to avoid reliance on Russia's Soyuz space rockets for obvious reasons, given the relationship between the two countries. It's hard to see how the U.S. space program goes forward without SpaceX. Listen, Matt, you're a car guy. If you just look at Tesla's attempts to try to get driverless taxis, driverless vehicles out on the roads, the U.S. will have a huge influence on that. So it's a two-way relationship, and I think both sides, as we're seeing already, are trying to find ways to kind of dial back the temperature, because they see it's in both their interests to not have this feud, at least not be so public and brutal, really.
So, Bill, what's your take on, Musk's ability to kill this bill, and also on the DOGE cuts? I mean, does Trump walk some of those back? Does any of that get undone? Or after a détente, does everything continue on as usual?
Yeah, I mean, I think Musk has put the wind in the sails of some of the Republicans who want to see much bigger spending cuts. As Kevin pointed out, it's a super slim majority. I think Republicans can only afford to lose 3 votes, perhaps in the Senate, and a roughly similar number in the House. So they don't have a lot of margin for negotiation. But I think, in general, in the short term, Republicans are going to fall in line behind the president. But just looking a little bit past the next few weeks, Republicans know this is the world's richest man. He poured $290 million into President Trump's campaign last year, helped him win Pennsylvania, helped him win the presidency. They want him on their side in 2026 when it comes to the midterms. That's not a relationship they think they can afford to lose either.
Bill, thanks very much. Bill Ferry's there, and Kevin Whitelaw talking to us about what has to be, at least yesterday, one of the most important feuds in the world. In terms of Tesla's stock reaction, that was also a case of $200 billion of lost market cap without any corporate news. I don't think I've ever seen anything like that. The shares closed down 14%. They were off as much as 18% at one point. You can see in the pre-market, Tesla shares are bouncing back a bit, recovering about 5%, as Valerie was telling us earlier, up to almost $300 a share. Let's get to the other top stories trending on the terminal this morning, if you care about anything else at all. BlackRock is planning a second round of job cuts this year, cutting about 300 people after a similar move at the beginning of 2025. It comes after the world's largest asset manager splurged on $28 billion of deals to wade deeper into private markets. The job cuts represent a little bit over 1% of BlackRock's workforce. HSBC Chairman Mark Tucker will leave the bank in September to take on a non-executive chairman role at AIA. Sources say the insurer has been holding informal discussions with Tucker on a role for at least a year. He will take over on October 1st. And the U.S. Treasury has called on the Bank of Japan to raise interest rates to strengthen the yen in its semi-annual currency report. The report is likely to support market speculation for the BOJ to raise borrowing costs again later this year. The BOJ holds its next policy meeting on June 16th and 17th. That's a two-day meeting. Coming up, we're going to look ahead to the payrolls report with Monica Defend of Amundi Investment Institute. Next, will the U.S. add 120,000 jobs for the month? This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. After a week of mixed jobs data, we end the week with May payrolls coming at 8:30 Eastern Time this morning. Joining us now is Monica Defend, head of Amundi Investment Institute. And Monica, to me, the most notable figures in the jobs picture this week have been really down arrow stories, right? ADP, a big disappointment, and then you had one of the worst weekly jobless claims figures in months. How do you expect that, or what does that tell you about what we're going to see today in the non-farm payrolls number?
Well, we frame it in our outlook that actually project a progressive cooling of the job market, not cracks, but definitely a job market that is slowing down. So this is our expectation for the day. In the idea that the trajectory for the U.S. economy is towards a softening in the growth rate. We have 1.6 as a projection for the year. That is coming from a softer consumer side.
So you don't expect a recession, because a lot of people have posited that we may, because of the pull forward demand ahead of the tariffs, see more imports leading to another drop in GDP and a technical recession. Others, like David Rosenberg, yesterday tweeted that the recession has been confirmed by the Beige Book. You don't see that happening this year in the United States of America?
Not actually. It is not our base case scenario. Obviously, it will depend on how the discussion on tariffs will unfold. But I would not forget the sequence that the administration has in mind, which is tariffs, security, but then tax cuts and deregulation that somehow should be growth positive. So the balance will be between how much they can cut on taxes and how much they might raise on revenue. So I don't really see tariffs as a reciprocity, but it's more as a revenue seeker.
Yeah, that makes sense, since Donald Trump has been a fan of tariffs for pretty much his entire life. And has been very clear about the fact that he wants to replace tax revenue with tariff revenue, regardless of what Howard Lutnick may say when testifying in front of Congress. How do you think that all works out? I mean, the CBO says we're going to see a $2.5 trillion deficit over the next decade, but at the same time, $2.8 trillion in tariff revenue. So that would seem to offset the hole in the budget.
Well, it's also a matter of timing, because there is a mismatch in the timing you get the revenues and the timing that you cut the taxes. So taxes will come before you'll get revenues. Having that in mind, we really think that the debt levels will stay high and deficit larger. But eventually, it will depend on how this will engineer growth, because you can sustain higher debt as long as you have growth. This is not exactly what the fixed income market, right, is pricing, with the movement that we have seen, particularly in the long end. Over the last month, the swing has been really huge.
It's been pretty interesting to me to see us really come back from the precipice of the danger zone in terms of yields, right? We were above 5% on 20s and 30s here. We were above 4.5% on the 10-year. And now the bond market seems pretty sanguine at 4.38 on the 10-year, 4.88, 4.87 on the 30-year. Does that mean we aren't as concerned in terms of debt and deficits?
Well, the risk premium is building up, and therefore the steepening of the curve is probably one of the biggest conviction we have. While it is really difficult to find a clear directionality on the rates front, so this is particularly difficult to allow us to have a strong duration positioning. So probably the 5-year at this point is better than a long duration of the 10 years, whereas the expectations are quite wide. I mean, the 10 years can go from 4 to 4.75. So it's really a big range. And what we are looking and monitoring is that this pressure on bonds is not only something U.S. denominated, but look at what is happening in Japan. So debt levels are high everywhere. At a time where you have central banks that started quantitative tightening and probably will be asked to reduce it. Think about the Bank of England, and a mismatch between supply and demand. So there is a lot more beyond the worries on the debt levels that is going on the bond market now.
By the way, I was thinking about what it means to the world when countries with massive deficits start to refinance those with all at the front end, in the U.S. and Japan if they don't have a lot of long end demand. And then I thought about Europe. Well, there really aren't. There isn't a Eurobond market, but there have been more and more calls for that. How does that look to you? When are we going to see that? Because it seems inevitable.
Well, I think there is a tremendous opportunity for Europe now to take the lead on the financial market and also on the trade side. The idea of the Eurobond not only or not necessarily to finance more defense, for example, but really to get a deeper and liquid market is coming from very vocal authors. So I think the opportunity is there. It is just a matter to take this opportunity and play it out.
Monica, great to have you on the program. Thanks so much for joining us. Amundi's Monica Defend there talking to us about what to expect on jobs and how the fixed income market views the global economy. Coming up, the big, beautiful breakup, the Trump-Musk rift headlining all major news outlets this morning. Obviously, that's all anyone wants to know about waking up. That's next in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Time now for our front page news. There's only one story dominating front pages this morning, and it's the very public feud between President Donald Trump and Tesla CEO Elon Musk. The New York Times reports Musk's friends and associates said they were in a state of disbelief over the abrupt break, despite knowing it wouldn't last. The friendship wouldn't last forever. The Washington Post wrote that Trump anticipated that Musk's criticism would become personal, saying he thinks Musk misses the place, and he suggested such hostility was common among officials who leave his administration. On the Wall Street Journal, Vice President J.D. Vance's post on X, writing, "President Trump has done more than any person in my lifetime to earn the trust of the movement he leads. I'm proud to stand behind him." That from the vice president who once compared President Trump to Adolf Hitler. A check on the markets right now. S&P futures are higher, and we see the U.S. dollar also rising after a slight decline yesterday. U.S. 10-year yield at 437, 438. Coming up, we're going to get more on the world's richest man's feud with the world's most powerful man, President Donald Trump, and what that means for Musk's business next. This is Bloomberg. It is 5:30 a.m. in New York City. Good morning. I'm Matt Miller in for Danny Berger with your Bloomberg Brief. Here's what you need to know. Cooling down. A public feud between Elon Musk and President Trump may de-escalate with a scheduled call today. Back in the green, stock futures climb as Tesla bounces back after closing down 14%. And all of that ahead of the latest jobs report after jobless claims rise to the highest level since October. Let's get a look at what's going on in markets this morning. We're looking at S&P futures bouncing higher, about 0.5% there. You can see S&P futures up to 59.72. NASDAQ futures also up 0.5%. Russell 2000, those small caps have been outperforming the S&P, NASDAQ, and the Dow Jones Industrial Average all week. Right now up another 0.6%. For some of the stocks that we're watching this morning, let's get right over to Valerie Teitel. She's in London with the latest. Valerie?
Good morning, Matt. Let's start with a check on Tesla. After the biggest market cap slide on record yesterday, that stock is recovering in the pre-market, up nearly 5%. The Politico report that White House aides have scheduled a call with Musk, also helping some sentiment to help this stock recover from yesterday's slide. Moving over to the retail sector, Lululemon having another disappointing quarter, a second disappointing quarter in a row. They also slashed their full-year profit outlook. The shares are declining 21% so far in pre-market trade. Lastly, let's go to the tech sector. Broadcom reporting earnings after the bell yesterday gave a weak outlook. This is the chip supplier to Alphabet and Apple. Those shares are declining 3.5% in pre-market trade. They have outperformed a lot since their previous earnings announcement. They were up 30% in that time frame, so giving back some of those gains so far this morning.
All right, Valerie, thanks very much. Valerie Teitel there running through some of the stocks we're watching this morning. Mainly, I think front and center, people are going to be looking up Tesla shares to see how they're reacting, because at the end of May, President Trump and Elon Musk stood side by side in the Oval Office, warmly celebrating the end of their political partnership, exchanging messages of love. We're not even a week into June, and the whole world witnessed a spectacular meltdown, a war of words, a back and forth of accusations that even involved Jeffrey Epstein. The world's most powerful politician took to his social media platform, and the world's richest man took to his, subtweeting Donald Trump as he was making comments in the Oval Office. Trump sparked Musk's tirade when he spoke about him yesterday during his meeting with the Chancellor of Germany.
I've always liked Elon, and so I was very surprised. You saw the words he had for me, the words of, and he hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible. It's the biggest cut in the history of our country. We've never cut. It's about 1.6 trillion in cuts.
Well, he got what he wanted. Elon did criticize him then instead of the bill. Then a user on X who had like 114 followers urged Elon Musk to cool the feud, and Musk actually answered, signaling that he will calm down the tensions with Trump, saying, you know what, good advice. When he responded, we won't decommission Dragon, talking about a SpaceX project that he does for the United States government. For more, I'm joined by Bloomberg White House reporter Akayla Gardner in Washington and transport and aerospace reporter Danny Lee. And Akayla, let me first, before we get to the whole SpaceX thing, just ask you how this elevated so quickly. What do we know about this, how this Trump-Musk feud developed?
Well, as you just heard in that clip, President Trump said Elon Musk had not made any personal attacks against him up until that point, and that was true. Except while he was speaking, Elon Musk was clearly watching because he fired off a series of posts on X, which is, of course, the social media platform that he owns, criticizing the president and specifically his claim that Elon broke from the administration because of provision in that one big, beautiful bill that scaled back tax credits for electric vehicle mandates. Elon Musk strongly denied that and then went on to endorse a tweet that said that President Trump should be impeached, that Vice President Vance should take over. Then you had President Trump saying that he was going to cancel all of Elon Musk's contracts. And then, of course, after that, Elon Musk said that he would decommission Dragonfly. But really late last night, it seems that tensions seem to have cooled. President Donald Trump gave a brief phone interview to Politico where he was very nonchalant about the breakup, saying that it was okay and talking about his favorability numbers. But you have this real tension with Republicans because Elon Musk was the single biggest backer for President Trump's campaign, and yet President Trump still remains the most animating figure in this party, and Republicans still very much want to be aligned with him.
So what do we know about the détente then, Akayla? I mean, I've heard they're going to have a phone call today that the White House is scheduled. You can understand why Musk would be eager to fix things after losing $34 billion in one day yesterday. He's lost over $100 billion since President Trump came into office. But I guess Donald Trump is eager to fix things, too, since Elon Musk's money has helped him and his fellow Republicans come to power.
I mean, if there's anything that we've learned from the White House's feud with universities is do not take their threats lightly. And I think this has a huge part to deal with the fact that Musk has millions of dollars in contracts with the government, with the Defense Department. And I'm sure he's taking that threat for those contracts to be potentially pulled very seriously at this point. And as you mentioned, he's already lost billions of dollars in wealth, and I'm sure he doesn't want to see that number go down anymore.
All right, Akayla, thanks very much. Akayla Gardner there covers politics for us here. I want to get over quickly to Danny because, as Akayla mentioned there, Donald Trump threatened to cut funding, essentially threatened to cut funding for a lot of Elon Musk's projects. He's made billions of dollars in defense and aerospace from the United States government. And then Musk, for a moment, threatened to decommission Dragon, which I guess is the only way we have to get people and stuff back and forth from the ISS and even to bring that ISS safely out of orbit when it's decommissioned, right?
Yeah, I think both sides are looking for some kind of play here, some kind of leverage, because both sides have really risen up together since Donald Trump's come back into power, and Elon Musk has really benefited from that. And so the threats are to Tesla and to SpaceX around the government contracts, and also just the dispute around potential subsidies around electric vehicles that could really put Tesla under pressure. Right now, $7,500 worth of tax credits that benefits the likes of Tesla, and that could threaten eventually $1.2 billion worth of Tesla's profits. And if you widen that out, up to half of Tesla's potential profits this year are at threat because of the various cuts that could be made to electric vehicle subsidies that it has benefited from. So clearly the anger and the frustration is there from someone like Elon Musk, but then also the Wall Street is very much taking notice, given that 14% drop in its share price yesterday. Clearly has recovered a little bit because of the news of the talk. So, very much, the business of politics and the politics of business very much coming up to the fore here. And yes, we are seeing the calm after the storm.
And in terms of SpaceX, I mean, how difficult, Danny, would it be for the United States to untangle itself from Elon Musk's rocket company?
It would be very difficult at this point because of how much success SpaceX has had and how much it's relying on. The government is relying on SpaceX, but it does have an option in the likes of Boeing and the Starliner. Clearly, that has had issues in the past, and given its troubles and Boeing's kind of reticence to continuing with space in some shape or form, it would be quite challenging. And given the importance of space in terms of the politics of space, I think this is something that the government would want to try and settle sooner rather than later.
All right, Danny, thanks very much. Danny Lee covering aerospace and defense for us. Kayla Gardner covering politics. Let's get to the other top stories trending on the terminal. This morning, Harvard University won a temporary reprieve from President Trump's ban on its international students entering the U.S. A U.S. district judge granted a temporary restraining order, saying Harvard would face immediate and irreparable injury if the proclamation went into effect. She set a hearing for June 16th. And Circle had one of the splashiest debuts in years, with shares surging 168% in its first day of trading. Shares of the stablecoin issuer more than tripling from the IPO price of $31 apiece. Circle's market value is now $18.5 billion, with a fully diluted valuation of about $22.1 billion. HSBC Chairman Mark Tucker will leave the bank in September to take on a non-executive chairman role at AIA. Sources say the insurer has been holding informal discussions with Tucker on a role for at least a year, and he will move over there to take the job on the 1st of October. Coming up, we count down to the jobs report with Citi's Veronica Clark next. Does she expect us to get an inline release of 126,000? That's the current consensus. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. It's just under 3 hours until the jobs report comes out, the granddaddy of all economic statistics. Joining us now to break down what to expect is Bloomberg's international economics and policy correspondent, Michael McKee. Mike, normally this would be the biggest news of the day.
Yeah, well, we're going to have some kind of weird number to displace Trump and Musk from the top of the news agenda these days. It's always possible. And certainly the markets are expecting a kind of weak report in comparison to what we've had. As you mentioned earlier, 126,000, which is definitely down from what we've seen. It's not, the Fed wouldn't think it would be bad, but it's not what we have been watching. 4.2% for the unemployment rate, and average hourly earnings actually slowing down a little bit on a year-over-year basis, even though they're up on a month-over-month basis, because it's kind of a base effects kind of thing. And I'm sure you've pointed out the whisper number is only 110,000. So Wall Street leaning negative here. We're going to watch the unemployment rate because that's what the Fed is watching. It's their sign of whether or not the economy is slowing down. And labor force size. It may be too early, but with all of the people who are no longer coming across the border, the labor force shouldn't be growing very much. And if that's the case, that will help hold unemployment down some. And then this hasn't gotten a lot of publicity because it really doesn't matter all that much. But there are huge revisions coming to the household survey today in all kinds of areas except for the unemployment rate. When they updated numbers, they made a mistake in the Excel spreadsheets, and it has changed a lot of the numbers, but only by 1,000 or 2 in all kinds of areas of the report. So economists can have fun parsing through that, but the BLS says it does not change the unemployment rate.
All right, Mike, we're going to be watching for sure, and I will encourage viewers who have Bloomberg Terminal, if you type WHIS GO, you can enter your guess at the number, at the headline number, and I think you get some sort of prize if you're correct. We have breaking news on the Bank of Japan, by the way, which is you've got to do some mental gymnastics to get your head around this. The BOJ is said to consider smaller reductions to its bond buying program. So I guess they had considered larger reductions previously, and now they will reduce the amount of bonds they buy at a lower amount. This, according to people familiar with the matter. We'll see if that has any effect on JGBs. Right now, not a lot of movement in that market. Let's talk more about the non-farm payrolls number. Joining us here on set is Veronica Clark, U.S. economist over at Citi. And Veronica, great to have you on the program. What's your expectation, first of all? I mean, as Mike mentioned, the whisper CIFR number is 110, but the consensus is 126.
Yeah, I think we will probably see some slowing in job growth. We've had a couple months where we've seen very resilient labor market data again, but we're at around 120, so that's right around consensus. That is slowing, but that's still a healthy monthly pace. But I think the more important part, and Mike said this also, of this report is that unemployment rate. So it's not that headline payrolls number, but the unemployment rate. It's been very steady in this 4 to 4.2% range for about a year. I think this could be the report where we see that breaking higher. We're expecting 4.3%.
4.3% is, I mean, that's going in the wrong direction, obviously, and I guess, could it be worse? I mean, that will take people's attention off Musk, Trump.
Yeah, I think it's, it's a very measured pace of increase still. It's not, something that's necessarily going to alert the Fed to weakness. But
we've seen bad numbers out of ADP this week. We've seen bad numbers out of the weekly jobless numbers. So this would just add to that sort of slowdown in labor.
Yeah, it's very gradual so far, but the risk is that at some point it's not so gradual, and that would be the highest rate that we've seen this cycle so far. And I would even say that there's upside risk to that increase in the unemployment rate, basing that particularly on what we've seen in that weekly claims data, where initial claims, they've come up some, but they're still low. But where we've seen the clear trend higher is in continuing claims, which is essentially if you do lose your job, go on unemployment benefits, it's taking you longer to leave those unemployment benefits. It's taking you longer to find a job. I think that's telling us that there's been this additional leg lower in hiring.
So, by the way, Mike also mentioned we could see a drop in hourly wages. And inflation seems to be dealt with, right? PCE was 2.1%. So if the labor numbers are going the wrong direction and inflation is cool, doesn't the Fed need to come in and cut?
Yeah, I mean, it's obviously about balancing the risks around all of that. And we have had some more favorable inflation data recently. There's always a start of year volatility, and we saw that January, February, March and April. The issue for inflation is that we haven't really seen the effect of tariffs yet. We're expecting to maybe start to see that in May, but really more late summer, early fall. And the Fed knows that that's coming, so they're going to be cautious for now. I don't think this is a jobs report that will get them too concerned, but the direction of travel is not great. And I do think that slowing wage growth, the loosening labor market, it does present just a very different labor market demand backdrop than the inflation of the pandemic, where we had very strong wage growth then. We had home prices rising, labor markets were very tight. We had a supply shock that led to persistent inflation. This time I think we'll have the supply shock of tariffs, but we don't have that demand backdrop. We won't have that persistent inflation.
What do you expect to be the effect of tariffs? Because, on April 2nd, people were freaking out about it, and now it just doesn't feel quite as bad. I cover the car industry very closely, for example, and right now, pre-tariff inventory is starting to run out, so you're going to see cars on the lot that have been imported post-tariffs. But the price increases we've heard about, Hyundai, for example, 1%, not a lot.
Yeah. I think the tariff backdrop, we April 2nd got terrible news, and it's been walked back to still some pretty bad news on tariffs. The issue is just it's a bit too soon to see it in a lot of the hard data. Obviously, we've seen very volatile import data. We've seen that in trade, got that earlier this week. And at some point, I do think, tariffs themselves will weigh on, ability to import, ability to spend. We will see higher consumer prices, but it's we're not seeing it yet is the issue. We are seeing maybe before we see that direct effect of tariffs, maybe we'll see the effect of uncertainty, and I think that could be that low hiring dynamic.
We have business owners and investors who are pragmatic and maybe right-leaning come on this program or my show all the time and say, 10% isn't so bad. That's something we can deal with. And that seems to be the baseline assumption. But then I know, 10% is the level that Europe put on U.S. imports that basically locked U.S. car makers out of that market. So how bad would a 10% baseline be?
Right. We really have no good historical comparison to know, unfortunately. We were going into this year, obviously we had tariffs from Trump's first term, so we were going into this year with an effective tariff rate around 2 to 3%. Increasing that by 10% is a lot. We haven't had tariffs this high in many years, so we don't know how the modern economy will react to that. And I do worry that maybe 10% is a bit of a floor for an increase that we'll see this year. Obviously, a lot of uncertainty with court decisions and whatnot, but we do still expect there to be sector-level tariffs that have yet to been announced. We might be looking at something higher than 10%, and that is every incremental percentage point will matter, I think.
I got to ask about the bill. How much do you expect it to increase the deficit? Because the CBO was out yesterday saying, actually, we're going to get $2.8 trillion from tariff revenue.
Right.
So
exactly. So the bill itself, when you're scoring it, it's not going to include the tariff revenue. It is wider deficits in the bill, extending those tax cuts, some new tax cuts, obviously some spending cuts in that too. But when you consider what we're expecting to raise in terms of tariff revenue, it can kind of offset that. But the issue is we are already looking at very wide deficits, 6% of GDP, whereas in a normal peacetime, we would be looking at maybe 3%. And if those two things are offsetting, well, then we just stay at 6% of GDP, which is still a really wide deficit.
Veronica, great having you in here. We could go on, obviously, for a long time on this. But we've got to get you to work. Veronica Clark there from Citi. She's their U.S. economist. Coming up, we're going to get you set up for your trading day in What to Watch. Next, this is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York City. Let's get a look at what's ahead through the weekend. The main event obviously comes at 8:30 a.m. New York time, and that is the May payrolls report that we've been talking about. Then one Fed Speak event scheduled before the blackout period. Governor Michelle Bowman, Mickey Bowman, who bank regulators are watching very closely, will be speaking at 10 a.m. this morning. And we're going to hear from ECB President Christine Lagarde on Saturday. So if you follow that market, she got pretty hawkish yesterday and signaled that the end may be near for a rate cuts. In terms of movers, Tesla obviously front and center this morning, leading the Mag 7 stocks higher after closing down 14% on Elon Musk's public feud with President Trump. Also, Broadcom is down, extending its post-earnings decline. It gave a tepid forecast, missing the loftiest expectations. Lululemon down after earnings showed growth is slowing, and it trimmed its profit forecast, and it is down big, off by more than a fifth. In terms of the big macro numbers that you want to be watching around the non-farm payrolls report, the dollar is an interesting one. You can see well, actually, I don't have the dollar here. The 2-year yield at 391, but the dollar is bouncing back up a little bit after a drop yesterday. The 10-year at 438, crude at $63 a barrel, and gold up near a record high at 33.56. That's it for the Bloomberg Brief. Surveillance is up next. This is Bloomberg.